talking about steel and Chinese production, which has been cut in the month of July. What are the implications on prices in the global markets and indeed for the Indian producers? We've got Mihika joining in to give you some context this morning. Mihika, what are you picking up? Morning.
Yes, good morning, Alex. So yes, Chinese steel makers did cut their output in July, and that also by a steep cut. It's down 9% month on month to 82.94 million tons, and this is the lowest production value that the country has seen in 2024. And when you look at for the first 7 months, which is Jan to July 2024, the total steel production is at 613.72 million tons, which is down 2.2% on a year-on-year basis. And it is to be noted that China produces almost half of the global steel output. Now, according to the nation's top steelmaker, the industry is facing a crisis, and this is more severe than the one seen in 2008 as well as 2015. China's real estate market is facing a severe downturn, and economic data also reflects shrinking factory activity. And when we talk about why China's steel prices are important, now the economic downturn have put Chinese steel prices under pressure. As per the latest data on Tuesday, the Chinese HRC steel prices were down 3% month on month and 10% on a year-on-year basis, as 41,550 rupees per ton converted. Now, China is the world's largest steel producer, and their prices often act as a global benchmark. And any changes in the Chinese steel prices do have an impact on other major producing countries such as India as well as Japan and South Korea. And overproduction can, with the basic economics, overproduction can lead to price drops, while cuts can cause price hikes. And when you look at how the effects have, overflown in India, well, Indian HRC prices decreased for the 8th consecutive week. Prices are down 0.4% on a week-on-week basis at 51,000 rupees per ton. Prices are down 5% in the last 3 months itself. Tuesday's prices were also the lowest level seen in the past 4 years for Indian HRC prices. And when you talk about the impact on Indian steel producers, well, lower prices do impact profits due to lower revenue per ton of steel sold. Companies could also face pressure when they try and reduce their selling prices in order to stay competitive, and this could reduce their margins. And firms can also incur inventory losses when they hold high amounts of inventory at higher costs. And when you look at the steel companies that maybe could get affected, or the steel companies that are in play here, we have large caps like Tata Steel, JSW Steel, Steel Authority of India, as well as Jindal Steel.
Much for getting us those details, Mihika. Let's turn to the F&O space.